Here's a counter argument to whether or not there's a bubble. What you see in the blue line are the 5 years from 1995 to March 2000 of the Nasdaq 100 and how it soared in percentage terms. What you see in the white line at the bottom are the 5 years basically up until now. Okay? And where that is in relative comparison of the Nasdaq 100 in percentage terms. You could argue, wow, we've got a heck of a long way to go. Of course, what belies that is you'd have to pretty much invent another set of companies which had caused the Nasdaq to rally in those preceding 5 years, which would have included an Apple and a Microsoft within there. So you're going to have to invent one. Well, actually, we do invent those regularly on the Nasdaq 100. But it's a counter to the people saying, or are obviously ridiculously overvalued. Yes, of course, on some metrics there is overvaluation. The way we're looking at it is on our picks over a 12-month period, we continue having large cap, lower volatile stocks, which on profitability and share price still look okay. Nothing looks ever amazing. Not good quality companies anyway. Continue having revenue growth year on year, dividend yields. So these are profitable companies as well. Strong cash flow growth and some momentum to the upside. So we're not looking for dogs and hoping the market suddenly decides to speculate on our crystal ball gazing. It's not what we do. And also ones which are consistent outperformers, because we think those are the ones which will continue rallying and the market move up and will also, should the markets fall, be resilient to any substantial falls. Have a look at my campaign for $1million.com for more free education on understanding the markets.